life is competitive. I don't know exactly what people are taught these days, but it is. You should get used to winning.
Blackstone, a financial giant with trillions in assets, has risen to the top of the investment world thanks to the ambition and strategic brilliance of its leader, Stephen A. Schwarzman. Behind its towering skyscrapers and multi-billion-dollar deals lies a story of ambition, controversy, and an unyielding pursuit of profit. This is the story of Blackstone, a firm that reshaped the financial landscape and the man who built an empire.
First rule is, don't lose money.
In the finance world, few names command as much respect as Blackstone. Starting as a small mergers and acquisitions firm in 1985, it has grown into a colossal investment powerhouse, managing trillions of dollars across diverse industries. This success is largely due to the ambition and strategic brilliance of its co-founder, Stephen A. Schwarzman. Schwarzman, born in 1947 in Philadelphia, showed entrepreneurial spirit early on, running a lawn mowing business as a teenager. He later attended Yale University, joined the Skull and Bones Society, and honed his financial skills at Harvard Business School. His career took off at Lehman Brothers, where he quickly rose through the ranks. In 1985, Schwarzman co-founded Blackstone with Peter G. Peterson. His leadership and vision propelled the firm forward. Known for his keen eye for undervalued assets and complex deals, he built a reputation as a master dealmaker. Beyond his financial acumen, Schwarzman is charismatic and skilled at building relationships with powerful business and political figures. His extensive network spans continents and industries. Schwarzman's influence extends beyond Blackstone. He is a prominent philanthropist, pledging to donate most of his wealth to education, cultural initiatives, and global leadership development. His impact on finance and philanthropy makes him one of the most influential figures in the industry. Blackstone's journey began in 1985 with Stephen A. Schwarzman and Peter G. Peterson, who started with $400,000 and a vision to reshape the financial world. Initially a mergers and acquisitions advisory firm, Blackstone quickly built a reputation with successful deals, like the $1.5 billion leveraged buyout of Safeway stores in 1986. Schwarzman's ambition soon led Blackstone to diversify into real estate, acquiring and transforming distressed properties into profitable investments. This strategic move set the stage for the firm's future dominance in the sector. Schwarzman's leadership emphasized meritocracy, intellectual rigor, and a disciplined investment approach. His guiding principle, "Don't lose money," fostered a culture of risk aversion and strategic foresight. Throughout the 1990s, Blackstone expanded into private equity, credit, and hedge funds, achieving success across various asset classes. Landmark deals, such as the $26 billion acquisition of Hilton Hotels Corporation in 2007 and the historic leveraged buyout of Equity Office Properties Trust, solidified Blackstone's global reputation. By the early 2000s, Blackstone had become a leading alternative asset manager with a diversified global portfolio. Blackstone's rapid rise has not been without controversy. As the firm's influence has grown, so has scrutiny of its practices and impact. Criticism has centered on its real estate holdings, industry influence, and compensation structures. One major criticism is Blackstone's role in the rising cost of housing. With a vast real estate portfolio, including single-family homes and commercial properties, Blackstone is accused of contributing to the shortage of affordable housing through rent increases and evictions.
This thing has really high embedded growth, so it's a little more
but your REIT yields in general are really low. So you get the growth, but if REIT yields go up, you're kind of treading water.
Yeah.
The firm defends itself by highlighting investments in affordable housing and responsible property management. Blackstone's extensive holdings in sectors like healthcare, energy, and media have raised concerns about its influence over these industries. Critics worry that the firm's financial power could prioritize profit over social and environmental concerns. Blackstone counters by emphasizing its commitment to sustainable growth and responsible ownership, citing investments that have created jobs and fostered innovation. The firm's fee structure has also come under fire, with critics arguing that management and performance fees benefit executives and investors disproportionately. Blackstone maintains that its fees are in line with industry standards and reflect the value provided to investors, pointing to a strong track record of returns and a commitment to transparency. Blackstone is the world's largest alternative asset manager, managing an impressive $1 trillion in assets. This capital is invested across various strategies, making Blackstone a powerhouse in private equity, real estate, credit, and hedge funds. In private equity, Blackstone acquires and transforms businesses in sectors such as healthcare, technology, consumer goods, and industrial services. Its portfolio includes some of the world's most iconic brands. In real estate, Blackstone owns and operates a vast array of properties, including commercial, residential, and industrial spaces across the globe. Blackstone's credit platform offers financing solutions to businesses and governments worldwide, encompassing corporate loans, real estate debt, and structured credit products. The firm's hedge funds provide investors access to diverse strategies managed by experienced professionals, known for strong returns. Notable investments in Blackstone's portfolio include Refinitiv, Merlin Entertainments, and Gates Industrial Corporation, plc. The leadership team, led by Chairman and CEO Stephen A. Schwarzman and President John Gray, ensures the firm upholds its legacy of excellence. Blackstone's recent performance highlights its disciplined investment approach and consistent value generation for investors. Despite its size, Schwarzman remains actively involved, providing strategic direction and mentoring future leaders.